just got done editing this interview. You guys are going to love it. Before I do that, though, I want you to know that I'm going to be in the comments for the next 30 minutes or so answering your questions. If there's additional questions you want me to ask the CEO next time I interview them, leave them below. Or if you're just loving the data points I get CEOs to share, click the thumbs up button below. That's your way of telling me you're loving this stuff, and I'll get you more of it. Additionally, again, I'll be in the comments answering any questions you have. All right, for 30 minutes. Enjoy the interview. Hello, everyone. My guest today is Khaled Naim. He is the CEO and co-founder at Onfleet, the leading last mile delivery management software platform. All right, Khaled, you ready to take us to the top?
Yep.
All right, so this is a hot space. Kind of help us understand how you guys are making money. What's the business model?
So we help companies that have some kind of a last mile delivery need. So they're delivering goods locally, typically to consumers, but we work with companies delivering to businesses in some cases as well. And we charge them a usage-based SaaS fee. So every month they pay us based on the features that they need, as well as the number of deliveries that they push through the platform.
Can you tell me the story of kind of a real customer?
Yeah, sure. So Total Wine & More, one of our customers, they deliver alcohol in around the country. They actually outsource in some cases to third parties, and in some cases they have their own fleet of drivers. And they're using our software to manage those fleets of drivers. So, they send a task when a customer places an order with them. They send a task in Onfleet to a driver, and the driver receives it in their app. So Onfleet has mobile apps for iOS and Android, as well as a dashboard for the dispatchers to see exactly what's going on and to manage the drivers on the road. So the drivers receive the work. They go about their day using the Onfleet app to kind of start and complete tasks and collect things like proof of delivery, so they can verify age through the app as well. In the case of Total Wine & More, and then when the driver completes the task, all that information is updated on the back end. The business knows exactly what's going on, what the status is of all of the orders, and the recipient, so the customer waiting for their order as well, receives notifications and real-time tracking of the driver.
So Khaled, you're then billing Total Wine & More based off what? How many fleet drivers they have using their app? How many deliveries? The GMV value?
It's based on the deliveries, yeah. So we don't care how many drivers they have on the platform or how many dispatchers are logging in. It's purely based on the feature set that they need. So in their case, they need things like age verification, maybe route optimization. So some of the advanced features put you in a certain tier, and then once you're in that tier, you get a certain number of deliveries included in that base rate, and then anything over that, there's an overage rate on a per task basis.
I see. Okay, very good. And give us, I'm sure you have customers that really span the spectrum from obviously big to small. But what's your sweet spot? What would you say the sweet spot customer is paying you per year to use the technology?
Sweet spot customers paying us around $10,000 a year, so around $800, $900 a month. So they're doing anywhere from call it 10 to 20,000 orders a month.
Okay, got it. So, okay, good. That's really helpful to understand. 10 to 20K orders. And again, you don't care about how many, people they have in the fleet, correct? Just the orders and the feature set.
Correct. Yeah, exactly. And we have, as you said, we have customers spanning a pretty broad range. On the high end, customers are doing hundreds of thousands of tasks a month, and on the low end, they're doing maybe hundreds.
Yeah. What's your whole platform today cover? How many, last month, how many total orders across the whole platform?
A couple million.
Okay. When do you break 10 million, you think?
It's a good question. Hopefully sometime next year. Month. In total, we've powered north of 50 million, but I think sometime next year we'll hit 10 million in a single month. So
50 million to date. When was day zero? When did you launch?
April 2015.
Okay. Was that your first customer or the first line of code?
That was our first. That was when we launched officially. So we already had our first line of code written and our first customer by then. Probably a couple months prior to that, we were in sort of private beta for a little while, and then we launched and announced our seed round back then. So was 2014 first line of code, or? Very end of 2014, yeah.
Okay.
Like that.
I like to ask the question, how much cash did you guys sink into the company from the first line of code to your first paying customer?
Yeah, it's a tough one. In our case, and I think in many cases, we went through an iterative process, right? So we were down at Stanford working on sort of location-based services technologies, targeting different markets, and just learning a lot about the space back then, and building technologies to help companies like Uber back then. And then shortly after we graduated, we sort of decided to focus on Onfleet. So we had been writing code and working on projects together, and then raised a little bit of funding back then, went through Stanford's accelerator program, StartX, and then we pivoted sort of shortly after graduating. So we had been working together for like a year and a half before we actually launched Onfleet.
So if you had to quantify that, I mean, you think you got out the MVP by 2014 for like less than 200 grand cash out the door, or more?
Yeah, definitely. And then when we decided to make the pivot, like we had learned a lot about starting a company, launching a product, and if there's one thing we learned, it was to get to market quickly and not spend too much time polishing the product before getting feedback from customers and establishing that there is really a market need. So we did that pretty well. We launched a very scrappy version of the product out the gate. And we had paying customers from day one, and that and they were complaining about the state of the product, which was a good thing. That's what we wanted to see, because if they didn't care for it, they wouldn't have told us anything, and they just would have stopped using it. So it really validated our assumptions.
So fast forward 5 years to today, how many customers do you have on the platform?
We are closing in on 1,000, so north of 500 customers today.
That's good. I mean, do you think you'll break 1,000 this year, or it'll take a couple more months?
Probably next year.
Okay. So 500 now, 1,000 next year, and you also hope to break that 10 million orders kind of, or deliveries per month next year as well.
Yeah.
That's good. Now it sounds like you have, I was going to really celebrate the hell out of this if you told me you were bootstrapped, but it sounds like you were not. So how much total capital in the company to date?
So we've raised around 5 million in funding. But at this point we are operating at profit a bit, like at break even. So, and we plan to continue, kind of growing in line with our revenue growth. So I guess you could say that we're now taking more of a bootstrapped path, but we, to get to where we are today, we had to raise a little bit of capital early on.
And I mean, can I multiply again, north of 500 customers times that 800 price point? That puts you north of $400,000 per month right now in revenue. Is that right?
Yeah, that's correct.
When do you think you break $1 million? Is that a next year goal too?
Yes, absolutely.
That's $1 million a month, obviously.
Mm-hmm.
That's good. Where's the growth coming from? Is it getting current customers to do more through the platform, or is it adding new logos altogether?
It's a combination of both. I mean, we've increased our average revenue per account, our average revenue per task. We've grown the number of customers that we work with. We've started working with larger and larger clients that are doing more and more deliveries. So as the company matures and the product matures, and we build more of sort of the enterprise grade features, we're able to work with larger businesses. Why
do you care about increasing revenue per task? You told me you don't get a cut of that or anything. You just care about how many tasks were completed.
Exactly. Well, so yeah, I'm not referring to revenue per task on the customer side, but the revenue that we bring in on a per task basis, based on the feature set that we have, basically.
I see. Okay, interesting. And if you're at kind of 400 grand a month today, where were you exactly a year ago? Do you remember?
Yeah, so we were just so Inc. 5000 just came out about a month ago or 2 months ago, and we placed 124 on that list. So that's kind of gives you I guess that's the number that we're being public about. Since 2015 to 2018, we grew about 2,700%.
Yeah, but come on, listen, you're a Stanford guy. I'm not an idiot either. Going from $1 to 10,000 a month is infinite growth. So why do you even waste time talking about a number that is really useless? It's a PR thing.
Yeah, it's certainly a PR thing. I mean, there are some prerequisites. You can't be making $1 a month in the first year.
What is it? It's like 50, right? It's like something really low. You can still multiply.
100,000. I think it's 100,000.
Okay. But still 100,000, right? Like again, multiplying small numbers is really, really easy, right? So so I appreciate you referencing it. And by the way, congratulations. It's obviously not easy, right? But help me understand. You have to obviously, I think they ask you to publish that number. So what number did you tell them in terms of your revenue this year or last year?
So last year, I think 3.2 million.
Okay. And you think will you double this year, you think, or no?
Yeah. I think we will.
Okay, good stuff. And I guess, again, 3.2 million, obviously in terms of run rate, monthly, that would be about $250,000 a month. You're at north of 400 at this point.
Yep. Sorry, you cut out there for a second. I missed the question.
Yeah, no. I was just saying 3.2 million in terms of total revenue last year would be about $250,000 per month on average. You're north of 400 grand a month today. So again, pushing that 100% year over year growth.
Exactly.
Yeah, that's good. All right. What about onboarding new folks? I mean, so what does it cost you fully weighted to get a new $800 a month customer?
It's about $3,000 for our customer acquisition cost is about $3K.
Where do you invest that?
It's, our sales team, our marketing costs, all the tools that we use. But obviously the majority of it is our salaries to the sales team and marketing.
And that's what, a 4 or 5 month payback period. You're good with that?
Absolutely. Yeah. That's pretty amazing.
Yeah. I'd say it's pretty good. Talk to me about the team today. How many folks?
So last time we spoke, I was just looking at the last podcast we did. We were 15 people. We're north of 30 now. So we've definitely grown the team. We're not all based in San Francisco anymore either. We're now kind of scattered around the world. We've started hiring remotely for certain roles. We still have our headquarters in San Francisco, and most of the team is based here.
Okay. How many folks are engineers?
About 12 or 13.
Okay. And how many quota carrying reps?
We're at probably around 8 now.
Okay. Fair enough. And how do you set their quota target?
Their quota target, that's a great question for our VP of sales. But how do we set it? We know exactly how much they need to bring in for them to, for us to maintain our customer acquisition cost. And so we base it, on that and historically, what other folks on the team have done as well as what they've done specifically. And it kind of grows over time.
And stickiness is critical. Khaled, you know this in a SaaS company. So if you look at your gross revenue churn over the past 12 months, what would you put that at?
Gross revenue churn is always pretty negative, negative 2 or 3%.
Well, gross can't be negative.
Oh, gross revenue.
Yeah.
Sorry, I thought you were talking about net revenue churn. Gross revenue churn, about 5 or 6% a month.
Okay. So if you're at 6% a month. Okay. So if you're at then -2 per month, it basically means you're expanding accounts by about 8% per month.
Right. Yeah. Expansion revenue is pretty big for us because it is, heavy. There's a heavy transactional component. So, as our customers grow, and Onfleet really enables them to grow. So there's this kind of positive feedback loop. But as they grow, they pay us more money and so, naturally we have pretty significant expansion revenue.
Yeah. It's very rare, Khaled, that I see someone with 6% gross churn monthly, which is about 72% annually, still have so much expansion where they can still get back above 100% net revenue retention. So, that's just a credit to people getting in your system, then drastically increasing the number of orders they process through your system and you're upselling them.
Right. Yeah. Exactly.
Who handles that? Are those 8 sales reps drive expansion revenue, or you have CSM folks, or are those your engineers and they do it via the product?
It's mostly customer success. We have customer success reps that work with our customers to help them kind of grow their business and if there are features that are right for them that are not yet in their plan, then they sort of help promote them to those tiers.
Mm-hmm. Any plans to raise additional capital?
Not right now. We're open to it in the future, but right now we're pretty happy with where we are and where our growth rate is, given that we're operating at break even.
Mm-hmm. Would you ever consider using debt to drive additional growth so you don't take any dilution?
We have actually raised a bit of capital from lighter capital, so they do revenue-based funding. And we would be open to raising more from them. We've raised around 600 or 700K from them.
When you plot out the cost of that $600,000, the cost of capital, like the effective interest rate, I know it's difficult on an RBF model, but what do you back into in terms of the cost of capital?
It's pretty expensive.
Yeah.
We're a startup, so it's risky capital, and they're not taking any equity, which is obviously nice for us. But we have to believe that capital is going to generate more than it costs us, and we do, and it comes out to about 17 or 18%.
Yeah. And what's tricky about it are those RBFs is you're paying back 4 to 9% of your monthly gross receipts, and it's like a 1.5x repayment cap over a 4-year term. So if you grow fast, and I'd say you're growing pretty fast, you pay it off before the 4 years, and your cost of capital shoots through the freaking roof.
Yeah. So it's there's definitely a trade-off there. But they do have, we have some additional terms. We have early repayment options. So if we do end up raising venture capital, then we can pay them.
There's a prepayment penalty though, to typically, especially if it's in 18 months of the first, tranche being taken down, correct?
Yeah. There is an early repayment.
Yeah. Hey, listen, they get you, but it is, I guess, higher risk thing, and you don't have to take dilution. So if it works, it works.
Yep.
All right, man. Let's wrap up here with the famous five. Number one, favorite business book.
Favorite business book? To be honest, I've been reading a lot less business books lately. I like to kind of alternate between business books and.
What's the last book you read?
The last book I read was Sapiens.
Sapiens, that's a good one.
I actually read cover to cover. I tend to start reading books and then get bored.
Number two, is there a CEO you're following or studying?
Always following and studying CEOs. I guess today Bezos would probably be the first on the list.
And number three, what's your favorite online tool for building your company?
Probably Gusto. We really like 15.5 as well. 15.5 has been great for us. We adopted that about a year ago, and that's a great way to manage the team.
Number four, how many hours of sleep are you getting every night?
8.
And situation, married, single, kids?
Married, no kids.
Okay, and how old are you?
I am 34.
34. Last question. What do you wish your 20-year-old self knew?
Don't take too much advice from other people. It's valuable to kind of aggregate that advice, process it, and then make your own decisions, because only you really know everything that you know. So, go with your gut more than you think.
Guys, Onfleet just passing $5 million in terms of run rate, up from call it $3.5 million last year. They're now delivering or helping over 500 brands deliver their goods. Each of those brands paying on average $800 per month. They're doing a couple million, call it 2-3 million in terms of deliveries per month right now across their base, hoping to get up to call it 10 million next year. Total over the life of the company back to 2014, they've delivered over 50 million deliveries. Pretty incredible. Only raised $5 million to do it, and basically break even / profitable today. So healthy company. Khaled, thank you for taking us to the top.
Thanks, Nathan.
These CEOs rarely give these kinds of interviews. I hit them hard, I get the data, and I want to do it more. So if you want to get more of this stuff, make sure you subscribe up here. And then additionally, go check out one of my other CEO interviews right now.